For those of you who are new, my name is Bola Shokumbi. I'm the founder and CEO of Clever Finance. We are an online financial education platform. We offer over 30 plus completely free courses and a ton of content to support you on your financial journey. So welcome to our community. We do this live every Wednesday at 1 p.m. Eastern Standard Time. And I will let my amazing co-host, Yazmir, introduce herself.
I have to keep myself on mute today because I have this cough. But hey everyone, this is Yazmir. I'm one of the content creators for CoverGirl Finance, joining you from New York City.
Yes. Hey everyone. So today we are doing a Q&A session. We've been asked to do this for a while. We've gotten a lot of questions. So we went and we gathered some of the questions that you guys had asked us in other live sessions, and we're going to open up the comment section for you to ask more that we can answer. But if you have a question, please leave it in the comments so that we can put it up on screen given the time that we have. And what else was I going to say? Oh, tell us where you're joining from. I would love to know where everybody's joining from. So leave a comment. And before we get into our first question, if you haven't already picked up my new book, Choosing to Prosper, this book is available everywhere books are sold. You can get it as an ebook, an audiobook, and also as a physical book as well. So please check it out. And if you already have a copy and you got it, please leave a review so other people know. And then be sure to check out our other Clever Finance book series. So there are 3 books in the series. If you're not familiar with them, again, also available everywhere books are sold. And you can ask your local library to order these books. I always get excited when somebody tells me that their library has these books, so you don't have to pay for the education. You already pay your taxes. So have your library get the books for you as well. So welcome everyone. Hi, Esther. Hi, Andrea. Hi, Joyce. Hi, Sonia. Hello from Tanzania. Hi, Tanisha. Hi, Lorraine. Hi, Stacy. Okay, so we're going to get into the first question we received. And if you have any money questions, career questions, please add them in the comment and we'll pull them on screen. But this is basically an open forum for you guys to get your questions answered about money, career planning, business even. And so I always love to answer questions, and I'm sure Yazmir does too. So let's get into the first question. Thank you, Javane. Okay, so the first question is, do you have any suggestions regarding recovering financially from a scam? So I don't know how much you guys have paid attention, but there's so many scams online. Yazmir, have you noticed?
Yes, there are. I almost fell for one. It was like super official about like, oh, your bank account, and it looked like it was from Chase. It was an email. But then when I looked at who sent it, it's like, this is not Chase. But it's getting like really easy to fall for those scams lately.
Yeah, some of the scams are very obvious. Some of them are, you have to look at the sender address. Some of them are really like well put together, but they're on social media. They're coming to you in email. Some people are even, making phone calls. And so before I talk about suggestions for recovering from a scam, one thing to keep in mind is, how do you avoid getting scammed? Number one, look at the email that's sending you. Do not click any links. If the email does not come from the at Bank of America, at chase.com, if it's like a Gmail or at wannabechase.com, do not click on it. And you can actually Google phishing for the company for the company of whoever is trying to scam you, and it will put them on alert to that email address. So for example, if you're getting a scam, an Amazon scam, Amazon has a phishing email, phishing, a phishing email, where you can send them these scams and they'll put those emails on their alerts. So don't click any links. Check the email addresses. Whenever your bank or financial institution or anybody who has your personal information is calling you, they're not going to call you and say, hey, Bola, I called you, but give me your social to verify you. No, they know who they called, right? And if anybody's asking you that, say, you know what, I'm going to hang up and call back and call the number of your bank or your institution to confirm it was them. And then you guys already know not to fall for those crypto scams. The Forex scams, so many scams out there. So how do you recover Number one, you want to first of all protect yourself, right? So I have been a victim of fraud, and this was like, you guys have heard this story, but somebody went into my credit union in Tennessee with my full ID that they had. I don't know how they got it, and they went in and they withdrew $6,000 from my bank account. They went in physically as me, right? So the first thing you want to do is alert all of your alert your credit, the credit. Oh, what's I can't speak bureaus, Equifax, TransUnion, Experian, that you have been a victim of a scam. Depending on what information they have of yours, you want to put a freeze on your credit. And a freeze basically prevents any new lines of credit being opened in your name. Any financial institutions, any companies you need to call to alert them of the scam, definitely give them a call and let them know. Put on monitoring on your credits. You might need to change PINs and passwords for all of your bank accounts, your personal information. It is annoying, but it is essential because you don't know how much of your information you were exposed to. And then you may need to file disputes with the companies, the creditors that uh, the money was stolen from, right? Which means you may need to write formal letters, mail them by registered mail. So those are some of the things that you're going to have to do in terms of recovery. And then if you're unable to get your money back, so I got my money back. I think it took like 3 months of investigation to get this money back, but I got my money back. And you basically want to start rebuilding, right? If you are unable to get your money back. So what can you do to start rebuilding? Being a victim of a scam is no fun. And one thing to keep in mind about scams and scammers, especially in this digital age, right? So for me, somebody went in physically, but that was like hard work because they could easily have done this online. And so for online scams, what happens is a lot of times when you hear about these data breaches, information breaches, these scammers sell your information on the dark web, and a lot of times they will sit on your information until your guard is down. They can take action on accounts that they stole 5 years ago, right? And 5 years later, you're not thinking about it anymore. So it's important to keep that in mind.
I also wanted to add something that I found out last year. Just to treat your phone number, especially the one that's connected to your bank accounts as a social security. Um, avoid just sharing it all over the place, because there was a story here in New York about someone who went into a cell phone company and was able to switch over someone's number into a new device, and then changing the passwords to like the apps, and then the person who wakes up and finds like they don't have any service.
Oh
And
God.
then when this person got service, found out that passwords were changed, and that the person was contacting their family members asking them for money as if they were the person that they were stealing the information from. So I've been doing that. I haven't been sharing my phone number. What I do is like I got like a Google Voice number, and that's what I give.
Yeah, so you can get a Google Voice number for free, but that's crazy. My
Yeah.
phone rings off the hook with unknown numbers. And I usually have it set on the iPhone where it silences unknown callers. But there was one number I thought I recognized as someone I was expecting to call me, but I didn't save the number. When I answered it, it was some company talking about my student loans, which I don't have student loans. I've never had student loans. I was like, what, let me call you right back. Because sometimes I will like, play into it. And I call back, and it was a lady's hair salon that picked up. So basically, what they were doing is they were masking their number with another business's number so that they couldn't be traced. And so I told the hair salon lady that I think your number is being used for a scam. So you need to follow up with the phone company so that any masking that's being done with your number should be removed. So it's just scams are really crazy. So just keep your eyes and your ears to the ground. Don't click on any links. Don't share your information. Get credit freezes, get credit monitoring. You can put credit freezes on your children's account, because a lot of times a lot of scams on children's social security numbers, right? Because it's so many years before you even consider looking at your child's credit, because why would you? Even scams on deceased people's information. So definitely keep an eye out for that. So I see another question from Live Life Learn. Hey, and she says, Should I continue to pay off my high interest credit card debt before opening my nail salon outside of my home? I don't know what's best. I want to get out of debt. So this is a really good question. Yasmin, you can share your thoughts and then I'll just add some color.
Um, yes, I would say yes. Only because I know, like, with interest going up, you're gonna pay more in interest. So if you want to save over time, money on interest, I would suggest to pay it off as quickly as you can. What are
Yeah.
your thoughts, Paula?
I definitely agree. Keep paying off that debt. If there's ways that you can accelerate your debt by making extra payments, to do it. But because you're opening up a business outside of your home, you want to make sure that you also create a buffer for your business. So before your business starts earning money or profits, open up a dedicated account and start to put some designated business backup money in the event that you go through a slow season, you have a business emergency, you have money dedicated for that, right? And you don't have to tap into your personal emergency savings. But while you can, as Yasmin mentioned, start to pay off that high interest credit card debt, because it's costing you a lot of money over time because of interest. And then as your business starts to make money, start to put aside a little bit of money every time you make a profit into a buffer account for your business that you can use to cover expenses, you can use for business emergencies, and etc. So for those of you who are just joining us, this is a Q&A session. You have a question, leave it in the comments, and we are going to try to answer them within the time that we have. So I see Wilderness Tanzania has a question, and they said, how to plan and manage your finances specifically for your kids. So I'll take this one, Yasmin, because I'm a mom of two of twins, and this is a great question, right? um, it's all about building your children into your budget, right? A lot of people plan out their finances and then their kids' expenses come as an afterthought. And when it's an afterthought, when that bill for the activity or those new shoes or those school supplies comes up, it's almost like, oh my God, there's no money. But the reason why there's no money is because maybe you didn't plan for it. So build your kids' things into your budget and take a look at, okay, what do I have coming up this summer, this fall? Are there activities? Are there trips? Are there camps? Are there new clothes? Are there school supplies? Build it as a line item into your budget. If you're unsure of what the expenses are going to be, or your kids don't have any expenses at all, know that they will have expenses at one point or the other. So just create a line item that you call kids, where you put a certain amount of money into a special account, for your kids' expenses. But the key to planning and managing your finances for your kids is by building your kids' expenses into your budget. Don't keep them separately. Don't be like, oh, I'll just use what I have left over. Have a specific line item for your kids' expenses. And if they don't have specific expenses right now, just start putting money aside for future expenses. Hello, Chris. Hi, Yvonne. Okay, so let's go back to one of our other submitted questions. And this question says, it's a good feeling to have no credit card debt. I often recover but fall back into debt. What can I do not to fall back into the credit card trap? Great question.
Yeah, that is. Um, I can share
Yeah.
my thoughts on this one. I feel like falling back into debt is pretty common. I've done it myself, but this is when it is very important to remember your why you paid off that debt, why you're saving money, because that'll help you from buying certain things. So, for example, like, I want to own a home. And if I walk by like a store and I see these nice shoes that I want to buy, I ask myself, is it worth it, these shoes, like, over owning your own home?
Mhm.
And I made a habit of doing that, because it's just pretty easy to fall back into debt.
Mhm. Yeah, and Andrea said she cut up her cards. Yes, that's another solution. But I would also say that give yourself the opportunity not to fall back into debt by making it easier for yourself. So, number one, what is it that's causing you to fall back into debt? Is it because you like to do something that you're not accommodating for in your budget? Maybe you like to travel, you like to go shopping, you like to go out to eat, you like entertainment. What is the thing? Like when you look at each time you fall back into debt, why is it happening? Or is it truly because you're trying to fill in the gap of a low income with the expenses and using your credit card to cover those expenses because you're not earning enough? So it's important to, number one, identify what the gaps are. If it's because of things you enjoy doing, then create a dedicated account, build a line item into your budget, and start to put money into this guilt-free account, so that when that fun thing, spur of the moment, last minute thing comes up, to go shopping, to go on the vacation, to go on the trip, when it comes up, you don't use your credit card. You now have this buffer account that you've built that you can just spend guilt-free because you set this account up so that you can enjoy yourself. If it's the other side where you're leveraging credit cards to sustain your life because you're not earning enough, what are the options that you have right now to increase your income and reduce your reliance on credit cards, right? So can you find a better paying job? Can you find a temporary part-time job to help you, get back on your feet? Can you sell things in your home that you don't need, that can bring you some extra cash, things in your garage, things your kids have outgrown that they no longer use? I guarantee that almost everybody has a few $100s in their house of items that they can sell and bring money in. Is there a low cost side hustle that you can start to bring some money in? What are the things that you can do? Can you downsize your housing? Can you get a roommate to help you cover the cost of your rent or your mortgage? Sit and think about creative ways to be frugal. I just did a podcast episode and we talked about that, and the episode comes out next week. It's on investing while surviving, and we talked about extreme frugal hacks and frugal hacks, all of which are articles on cleverfinance.com. So think about ways that you can increase your income to reduce your reliance on credit. But it's really important. And I love the idea of cutting up your cards, freezing your cards. If you memorize your cards, call your credit card company and say, you know what, I don't want to close my cards because it will affect your credit, but I want to get a new card with a new number, and don't memorize it, and then cut it up as soon as it arrives and put credit monitoring on your account.
Yeah, and I would like to add, don't save when you're shopping online. Don't save your credit card, because yes, you can cut up your credit card or freeze it, but if it's saved like on your Amazon account or wherever you're buying from, and
Yeah,
you're
so
gonna fall.
exactly. So definitely understand your trigger. Nobody's saying don't shop on Amazon, don't shop wherever. You may need to pull back, right? Because sometimes you need to just start to build that discipline muscle. Pull back. You're doing too much. But then also give yourself that grace to enjoy the things that you want to enjoy without getting yourself into debt and start to feel this emotional guilt, to feel this burden, because then you don't feel good about the things that you enjoy because you feel so guilty about having to spend on them. Okay, so Linda, she says, hey Linda, should I save a certain amount first and then worry about paying off high interest debt, or should I do both simultaneously? I have an idea about this and you can share your thoughts, yes, but I would say that you can do both. I think it's really important to have a buffer, a baseline emergency fund of like $1,500 just there, because this can cover your basic emergencies, like emergency plane tickets, flat tire, a quick repair. It can cover those basics emergencies that can throw off your budget. Once you have that basic emergency savings put aside, then focus aggressively on paying off your debt. I will also say that if you have an opportunity to invest in an employer-sponsored plan and your employer is offering you a match, please take the match. Please contribute. It is free money. Your employer does not offer your match, I still think you should contribute to your retirement savings account, even if it's like 1, 2, 3, 4, 5% of your income, and then shift your focus to paying off your debt. And the reason why I say you can do both simultaneously, have that emergency fund, save for retirement, is because of the missed opportunity of time on your side. The longer you wait to invest, the less time you have your money to grow, appreciate, compound, especially for the long term. And as you know, there's no handout, right? When we get older, you survive based on what you have saved, or you rely on the government. And nobody loves being on government reliance, because it doesn't give you the lifestyle that you truly want for yourself. So definitely save that baseline emergency fund. Start putting a little bit aside for retirement, and then focus aggressively on paying down that debt. And think about ways you can increase your income so that you can put more money on top of getting rid of that debt. Yasmin, you can share what you think.
Yeah, I completely agree with you, Bola. I wanted to add that money can be like psychological, emotional. So I find it's helpful to do both, because you might get like discouraged if you're like focusing on like just paying off debt, but like you don't have anything on your savings account, or you have all this money in your savings account, but the interest on your credit card debt is building up. So just, decide like, okay, I have this amount of money, 75% is going to go towards the debt, and then like the remainder to my savings. And then once you pay off that debt, you can, that same money that you're using to pay off that credit card debt or whatever debt, you can use to save.
Yes, yes, exactly. I'm seeing a lot of really good questions here. So I see this one from Noma F. Maroga, and they say, is it good to buy a house first before building an emergency fund? You need an emergency fund. Just like children, your house comes with expenses. And I guarantee you, it doesn't matter if it's a brand new build, they just set up all the walls yesterday, something is going to break that's going to cost you money. And so, in addition to saving that house down payment, a lot of people forget to save to cover moving costs, to cover repair costs, and to cover emergencies. So when you're saving your down payment, add another 10% on top as your goal to save, so that you have this emergency fund when you move into the house to cover the unexpected. Because you may have, let's say you have an emergency fund to cover you because you don't own a house. When you have a house, you want to expand that emergency fund because your house comes, there's so many different expenses: air conditioning, heating, electrical, plumbing, landscaping, snow removal, the roof, all kinds of things. So you need to have your emergency savings. And Yasmin, I think you can answer this question. So Esther says, how do I manage savings as a firstborn when you're the only breadwinner in the family and you're everything from your family and you're the only one who is working and your siblings need help?
Yes, Esther, I can relate to this because I am the oldest. And I'm the most responsible with money. So a lot of people, family members, rely on me. I think it's important to set boundaries with them, because oftentimes, like, yes, there's a need, and if you're able to help them, fine. But if you can't, uh, and it's not like an actual need, it's okay to say no. You'll feel guilty about it, or they'll make you feel guilty about it. Um, but I say, like, practice saying no, and it gets better. You have to prioritize your saving, and you can choose to share that with your relatives or not. You don't have to. You can just say, I just don't have it.
Yeah, I mean, it's a tough situation to be in, to be the one that everybody is relying on. And I have many friends who are in this situation as well, where they are the one that has to support everything for every family member. But the thing is, depending on your age of your siblings, they can also figure out something to do to contribute to the household. And the other thing to remember is that if you are unable to stay afloat with your own needs, it doesn't matter how much intention you have, you cannot support your family. So you have to be honest and candid and say, this is what I can give. These are my bills. In order for me to give to you, I have to be able to pay these bills as well. Otherwise, we lose the house, we lose this, we lose that. So you have to be open and candid with them. And you also have to challenge them. Okay, maybe there's a sick member of your family, maybe there's somebody who cannot work, but for those of you who can work, what are you doing? What have you been able to do? Right? What happens a lot of times is that there is one breadwinner, and then you see other people just kind of like, taking it easy. Yeah, I was looking for a job today, but I couldn't find a job. It's because they have the money coming from you. So, be open, be honest, be candid, and tell them, I'm doing my best, but you guys need to find a way to support as well, in whatever way that you can support, right? If someone cannot work in the house, maybe they can sit down and do a meal plan so that they can effectively manage the food budget that you have given them based on what you can afford, right? Not just sit around and eat all the food and be like, hey, Esther, we're hungry, we need more money. What have you done to support me as the sole breadwinner? Okay, so R asked about sinking funds. So speaking of dedicated accounts, I read up on sinking funds. We have a great articles on clevergirlfinance.com on sinking funds. So if you want to go check that out. Do you have any tips on incorporating those in your bank accounts? Do you open multiple accounts or sub accounts within existing ones? So sinking funds, for those of you who don't know, are separate for emergency funds. Emergency funds are for the unexpected. Sinking funds are for the expected. I know my car is going to need a service soon. I know my car needs new tires. I know my house needs a new roof. I know that I have to pay for a friend's bridal shower. Those are sinking funds. And so what you can do is you can put them in separate accounts so that you know exactly how much money is in each account for that sinking fund category. Many online banks allow you to have sub accounts, or you can have one sinking fund account and a spreadsheet where you track how much you need to allocate from that account to each of your different sinking fund categories. And as a reminder, your sinking funds are your expected expenses. You know that these expenses are coming up and they're beyond what you typically plan for in your month-to-month or your week-to-week budget. Did you want to add anything, Yazmir? Thank you, Chris. I see you chatting. You asked a great question. Do we follow what Dave Ramsey preaches? So our goal at Clever Finance is to empower you with education and information so that you can make your own sound decision. We do not preach anything here because there is no one way to do things. And the reason why personal finance is called personal finance is because it is personal. So we share our opinions, but we don't preach to anyone. Like, make the best decision once you are armed with the information. And the key to being able to make that best decision is being armed with the right information. So that is our goal, to arm you with the right information. Yasmin, sorry, did you want to add anything regarding sinking funds?
Oh, sinking funds. No, they're a great idea. Because that's also another way to keep you from using your credit cards, especially if you know like already what you have to save for. So yes, sinking funds are great.
Mm-hmm. So there's another question in here. Thank you, Remy. Thank you so much for your kind compliment. I'm going through the questions to see what okay, so this is another question from Evelyn. I'm going to try my best to answer this. So how can we build health expenses from a chronic condition into our budget when the costs go up and down, but you're also trying to pay off credit card debt? So I'm assuming chronic health condition. Health is one of those things that can be incredibly expensive if you don't have insurance. So I think one way you can get ahead of it is really plan, like look to see what exactly your insurance covers, number one. Depending on your income, look to see what programs, services, and even charities. And I've heard of charity insurance for people who are unable to pay their medical bills. Depending on your income level, look to see what programs exist also within your state, right? And also by asking the hospital. So my husband is a physician, and he tells me many times, that he tells a lot of people many times, that if you are unable to pay your bill, you can always ask the hospital what programs and plans they themselves have available. And then the other thing is, okay, you know that there's a chronic condition. What can you do to find ways to increase your income and start to create a buffer account where you can put money in to pay for that chronic condition? And then how can you also prioritize your credit card debt? So let's say you have a credit card and you know you have to pay $500 a month. Are you able to make payments in excess of that $500 while funding this health savings account that you are putting as a buffer? Or can you only afford to pay the minimum? If you were to choose, I would pay the minimum and prioritize your health care, because your health is everything, right? If you're not here, who cares about credit card debt? This is me speaking candidly. Your health needs to be prioritized, right? A medical issue is prioritized over everything, because you need to stay well, you need to stay alive, you need to be able to be there for your family. And then once you're able to pay for that, or have that covered, or you started putting money aside, then you can say, okay, health is under control. We're managing this. How much extra can we put towards credit card debt? So that's just my opinion on this. Your health is two major things in life are your health, your finances, but you can't do anything with finances, life goals, any of those things if you're not in good health. So health comes above everything else.
Yeah, I wanted to add that when you like get a bill from a hospital, just like go through it carefully, because sometimes mistakes happen and there's an added charge there for service that you did not receive. So just go through everything on there, and you also have the option to negotiate. Prices for services, either with the hospital or with your health insurance.
Yes, exactly. So explore your different options. Very, very important. Insurance, plans, programs, charity programs. Do like exhaust all your options in terms of how you can get the right coverage and support to pay those health bills. I see a really good question here about from Linda again. So she says, "What's the best way to decide if you should buy a house or rent an apartment? I struggle with this because I don't want the money I spend renting to be a waste, but hesitant to be a homeowner." So people are very opinionated about renting versus buying. Super. Oh my God! Like people are so opinionated about this, and I will tell you, there is no wrong decision here, right? You do what is right for you. If you choose to rent, then you don't have to deal with the burden of home expenses because that's your landlord's problem. And the money you can save there, you can put towards saving and investing. Right? Real estate is not the only way to build wealth. There are many ways to build wealth, including investing in the stock market, including what's it called, small business, starting your own business, investing in other people's business. You may choose not to be a homeowner, but you may choose to buy an investment property. There are many different ways to build long-term wealth. So don't feel guilty because you don't own a house, right? As a homeowner, I am a homeowner. It comes with a lot of expenses, right? Repair here, renovation there. I could put that money to many other things. However, as a homeowner, I'm also able to build equity in my home and leverage my home as a vessel for building generational wealth. So I pay off this mortgage, I pass down now this mortgage-free home to my children, or my home appreciates and I sell it at a profit. However, right, the home that you live in is not necessarily considered an investment per se because you are actively paying when you are actively paying a mortgage that has interest associated to it, right? So let's say I buy a house for $100,000 and I live in it for 10 years and I sell it for $150,000 and I get $50,000 of profit. I've probably spent way more than $50,000 on mortgage, renovations, repairs, blah, 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 blah. So when you think about home that you live in as an investment, yeah. Whether you rent or you own a home, I don't consider either a waste of money because at the end of the day, you need to live somewhere, right? And wherever, for most people, wherever you live, you've got to pay, whether you own it or whether you rent it. So, Linda, do what is best for you when it comes to deciding whether to buy a home or rent your home, but make sure that you have an appropriate plan to build wealth and take care of yourself and your family long term.
I live in New York City, and it's very expensive here. The average rent here is like above $5,000. So it doesn't make sense for me to rent here. What I am looking to do is just move on, move further north of New York City, and buy a home there, because paying for a mortgage is cheaper than renting here. um so it'll allow me to like pay the mortgage and save, because saving and investing is very, very important to me. But with the rent going up in New York City, I won't be able to do that. But you might live also in a place where it's just cheaper to rent than to buy a home. So just take those factors into consideration.
Yeah. So we'll do two more questions in interest of time. I see another question from Live Life Learn. And she said, "My husband and I are in our late 40s. My husband has a pension. My full-time job offers no investment incentives. What advice do you have for late investors?" So The plan for late investors is take a deep breath, don't panic, and figure out how can you play some catch up, right? In your 40s, you guys are still very young, you have lots of time. A lot of people have this idea that you get to age 65 and then retirement is one day and you all of a sudden need $1 million for that one day, and then after that you drop dead. No, retirement is 20 to 25, 30 years from age 65, for some people 40 years. That's a long time, and that's an opportunity for your money to still be invested and your money to still grow. So in your late 40s, you still have time, right, to save, because even if you said you need $1 million for retirement, you're not going to spend that whole $1 million on the day of your retirement. You're likely going to spend a certain amount of money a year. And the goal to maximize your retirement savings is that by the time you get to the time frame in which you choose to retire, number one, hopefully you do not have any mortgage, right? So you've minimized that housing cost. Hopefully your kids are out of your house and taking care of themselves. Got their own jobs. So you eliminate that kid expense. And a lot of times when your kids are out of the house, people tend to downsize, housing, which also downsizes your expenses overall. So that helps to maximize the money you have saved. So what can you do to catch up? Look at your budget. Are there I think, oh my God, I don't have the information, but from age 50, I believe you can contribute an extra amount of money into your retirement savings. Your 401k, your IRA. It's called the catch up. I don't know the actual age, but we'll put it in the comments of this video. I look it up on our website after this, and it's also on irs.gov. When can you contribute catch up savings? You can Google that. But there's an amount you can contribute to catch up, number one. So look at your budget and determine how much money extra do we have to put towards our investments, our retirement savings, our non-retirement investments to play catch up. Is there an opportunity for us to work an extra job, work a few hours, consult here and there to bring in extra money to put towards our retirement savings? Is there an opportunity for us to downsize, right? Like I mentioned earlier on in the other question, to put money towards our retirement savings. You want to take advantage of all these opportunities. You may be contributing to a 401k or IRA and completely max those out. But if you're working and you have extra cash to spare, that's not where you have to stop. You can open up your own brokerage accounts. You can open up your HSA accounts and start to put money in there that you can leverage as retirement vehicles into the future. So the key to playing catch up is how much money can I put in addition to what I'm doing now to accelerate saving so that we can reach our retirement goals. Knowing that if you need to extend your timeline, that is perfectly fine. And also knowing that retirement is not one day. So whatever your retirement money goal is, you're not using all that money on the one day that you retire. There's several years for you to continue to save and several years for you to continue to grow your nest egg. Most retirees do not sit down in front of the TV all day long, right? My parents are retired. My mom still works. She actually started a second career and became a nurse, and she loves what she does. So a lot of retirees end up doing part-time jobs, starting their dream side hustles, doing different things. So you can definitely catch up. You guys want to add?
No, I think you said everything.
Okay, so let's pick up one more question from folks who submitted a question. And it says, if I get paid bi-monthly but not on a set date, how should I go about automating my finances?
Oh, I get paid semi-monthly. So what I do is, because I know I get paid on the 15th of every month and on the last day. But the last day varies because some months have 30 days, some months have 31. So like if you're paid that way, what I do is I go into my bank account and I tell my institution or just every 15th of the month, please take out this amount and it's going to go into my savings. And since the last day varies, I just put in on the first, for money to go into my savings. And you also have the option, I do this too, of speak to you HR and see about options about splitting your check. So part of my check goes into my checking, and that's what I use for expenses. And then the other portion goes directly into savings.
Yeah, I agree with that. So if you're getting paid on a date that is different every time, pick a specific day after you know you will get paid. So the first day of the month or the last day of the month, and use that as a date that you set up your automation around. And one way, sorry, one way you can do that, you can avoid temptation of spending that money is putting that automation money into a different account that you just don't access. Just know that you check on it to make sure that the transfers have happened, but that's not your day-to-day checking account, because if you have that money sitting waiting for the automation to happen for you to transfer it somewhere, then what happens that you're like, oh wow, I have an extra $500, so there's an extra $1,000, let's go out to eat, let's do this, let's do that, and then when it's time for the automation to happen, no money. Right? So separate this money elsewhere so that the automation can do its job. Um, um, and you're able to save regardless of what day you're getting paid. I just want to look up this IRS catch. I know this, but okay. So yes, the catch-up amount for individuals over 50 is up to $6,500 in 2022. So you can contribute extra funds on top of what your retirement accounts limit is, up to $6,500 to play catch up. Andrea says she also splits her check. Stacy, thank you for adding that information. Individuals who are over age 50, thank you so much. I just looked that up as well. And you can learn more about this, the specific guidelines on irs.gov. Just search retirement savings. And they have a ton of information, especially most up-to-date information for the current year. Yeah, so this was our Q&A. If you guys enjoyed this Q&A and want us to do more Q&As, let us know in the comments. If you're watching this as a replay, we're happy to do them, because we usually pick specific topics for these lives, but we also want to make sure that we're answering your questions and we're supporting you in the best way that we can. And for questions that you have, there's tons and tons of articles on clevergirlfinance.com. We have hundreds and hundreds and hundreds of articles. We have 17 writers supporting that website, and there's new content every single day. So if you have a question, it's probably answered. And if it's not answered, please send us an email and say, hey, please make an article on this. We have our over 30 plus completely free courses. They are free. We have a whole worksheet library that has over 40 plus worksheets. So in one way or the other, we know that we can support you or do our best to support you. And we appreciate you guys so much for being here. And so just let us know. If you haven't already picked up one of these books from Clever Girl Finance, please grab one. This is my newest book, Choosing to Prosper. And then you can get the other 3 books wherever books are sold. We've got you covered on financial foundations, on investing, on side hustles, on business. We got all of that here for you. So ask your local library, ebooks, audiobooks, physical books. You can get to Amazon, at your bookstores. And you can also ask your local bookstores to order the book for you, any of these books for you. They can order them for you. So thank you so much for being here, and we will see you guys next week. Yay! So people love the Q&A. Woohoo!
Oh, good.
So yeah, we'll continue to gather the questions. And yes, hit the like button, please. Subscribe to this channel. Tell your best girlfriends about Clever Girl Finance. And we'll see you guys next week. Thank you so much.
Thank you, everyone.
Bye, everyone.